Well, hello everyone. Welcome to our webinar tonight. I'm excited about this. First, let's make sure that everybody can hear okay. If you guys are having any challenges with the audio or the video, you guys should have a chat option on the webinar link. Please let us know and we'll do our best to address that. But I'm excited. For those of you that are familiar with our company, I've been here for a while, and we used to do a live webinar on a monthly basis. We called it the Home Shopping Network. So our investors that were interested in purchasing promissory notes from us would get on our monthly webinar, and we would highlight our top 5, and we talk about the market and things that were pertinent to the alternative investment world. And so we haven't done it for a while, and I've met with my marketing team earlier in the year, and we decided that there was a lot of value in this. People liked this format because it was interactive. So first, I want to encourage all of you that as we go along, feel free to ask any questions. I'm going to do my best to address all of those tonight, and if I see some that are pertinent to the information we're covering at the current time, we'll stop and address those, but I will do my best to at least address those before we close out the webinar this evening. But first, I want to introduce myself. My name's Heather Dreves, and this is the Passive Investing Real Estate webinar you guys are all attending with Secured Investment Corp. So we're going to get started here. Like I said, we've got a lot to cover tonight, and your guys' time is valuable. So I want to make sure that I am mindful of that, and I'm bringing all of you value through the webinar. So first, I'm going to check, make sure we're ready to go. We ready to go, guys?
Yes.
Okay. All right, so we're gonna get started here. I'm excited for this. I see some familiar names and a lot of new names, so let's get going here. So first, I do need to keep my legal happy by reading you guys a fairly short disclaimer. I don't know that there's anything short in the legal world, but I'm going to do my best to make this quick for you folks. So no offer or solicitation. This is not a solicitation. The material herein does not constitute an offer to sell, nor is it a solicitation of an offer to purchase any security. Offers will only be made through relevant investment documents, for example, private placement memorandum, offering circular, purchase and sale agreements, and or subscription agreements, and where permitted by law. You investors should consider investment objectives, risks, charges, and expenses of each investment opportunity carefully before ever investing. We do not make any representations as to the accuracy or completeness of the information contained in this presentation or website or other materials, and undertake no obligation to update the information. Past performance is not always an indicator of any future results, and all investments contain risk and may lose value. Any historical returns, target returns, expected returns, or probability projections may not reflect actual future performance. Investors should not rely on forward-thinking statements because such statements are inherently uncertain and involve risks. Investments are not bank deposits, and they are not insured by the FDIC or other federal government agencies. They are not guaranteed by Secured Investment Corp or their affiliates, and they may lose value. No, oh, whoops, sorry. Let's get here to the next slide here. Photos of real estate assets depicted are not part of the investment opportunities. These are representations of past transactions conducted and underwritten by Secured Investment Corp management team. These transactions are also representative of the types of transactions and assets that the funds will be participating in. Neither Secured Investment Corp nor any of its affiliated funds or entities are registered investment advisors, nor are we broker dealers, and we do not provide investment advice. No communication from Secured Investment Corp or its affiliated funds or entities through this presentation, website, webinar, email, other materials, or otherwise is intended to be or should be construed as investment, tax, financial, accounting, or legal advice. Neither the SEC nor any state securities commission or regulatory authority approved, disapproved, endorsed, or recommended the merits of the investment opportunities described in this presentation. Phew! That was a long one. So if I haven't scared you off by now, get ready. We're going to cover a lot of things today. I've got some really exciting news we're going to announce at the end of the webinar. So we've been working on something for several months here internally, and we think you guys are going to be excited about it. One of the things that we do here is we listen to our clients, and when there's a need for something, we do our best to be able to provide that opportunity or that type of product. And so we're excited to announce the big news tonight. So a little bit about myself, for those of you that don't know, I have been with Secured Investment Corp for 11 years now. It's really hard to believe that it's been that long. I actually look at pictures of my kids when I first started working here, and they were elementary, middle school kids. So it's been a great 11 years. I'm excited for the next 11 years. I've been in the actual industry, so the private money space, the capital raising, working with investors for 18 years now. In my career, I have raised almost $1 billion. I actually ran the numbers today, so that was super exciting to see. I'm an author. I did write a small book about generating passive income as a private lender. Pretty proud of the fact that I've been married for 28 years. I feel like my husband and I make a great team. We've got 2 amazing kids. Ethan, our oldest, is 25 and is a full-time firefighter. And our younger son, Noah, had just turned 23 last week, so that's pretty exciting. And at the end of August, we'll be graduating with his master's. So he is pursuing a career right now as a college soccer coach and teacher. So we're pretty proud of both of them. Both of them have actually been active through some of our real estate investments that we have made. We've tried to set a great example for our kids on how they can create wealth for themselves outside of their day jobs. So this was a picture we just took recently. We actually had the fortunate experience to go to Whitefish, Montana. If none of you have been there, you should take a trip there. It's beautiful. This was actually up at the ski mountain this summer. We went for a 3-day country concert, so we had a great time. So side note, if you've not been to Montana and Whitefish, you should take a trip there. But I am an active real estate investor as well as a passive investor. My husband and I own rentals. We've fixed and flipped. I joke that we did not look anything like Chip and Joanna, and it was not quite that glamorous, but we did it and we learned a lot. And to be honest, I think we like the passive investment side of things a little bit better than that. So I'm a native to the Pacific Northwest, grew up in Spokane, Washington, currently reside in Hayden Lake, Idaho. So feel pretty fortunate that we are able to enjoy this beautiful part of the country. All right, so just to kind of set the tone, some of the things that we're going to talk about today are new things, but I think, you know, one of the things I kind of want to start off with, kind of setting the tone for this presentation, is things that you guys should consider when investing with any operator like us. So this isn't going to just be about us, but this, you know, some of the takeaways that you guys should take from this presentation is what you guys should be looking for when you guys are talking to companies like ours, looking at investing in alternative investments. We're going to talk a little bit about who Secured Investment Corp is, what we do, and then what the benefits of investing in privately managed real estate funds are. And then we're going to finish up with what we actually offer here at Secured Investment Corp when you're looking at alternative investments. So as you can see, we've got a full schedule. So I want to make sure that we have enough time to hit everything. So I'm going to start moving through these. Like I said, as you guys have questions, put them through on the chat link on your webinar link, and I'm going to do my best to answer those. I want this to be interactive. I want you guys to get the information that you're looking for. So let's talk a little bit about best practices and due diligence on an actual operator. And these are things that you guys should be okay asking, and you should be asking. It is shocking to me the amount of clients that I talk to that say, yeah, I invested with this other company about 12 months ago. I didn't ask any questions. And now I'm finding out all these things that I probably should have asked in the first place. Don't be afraid to ask questions. You guys are investing your hard-earned dollars. You should be able to feel like you have an open line of communication with the operator that you're investing with. And if they don't want to answer these questions, I would not be investing with them. So research the fund operator, look at what their history is, what their experience is, what their qualifications are. A big one is track record. I do junior JV webinars with other operators, and one of the things that one of the people that I've done quite a few webinars with talks about all the time is, if I'm investing with somebody and they're investing in commercial and they've never invested in commercial, they've always been in the residential space, I start to ask a lot of questions about track records. So evaluate what their past investments look like with that operator. What is their track record? What is their history? Have they had some challenges? Quite honestly, operators all have challenges. This is real estate. Not everything goes as planned, but if they tell you that everything has always been rosy, I would start to have some concerns about that. What I would look for is, hey, has this operator been through some challenges in the market, and how did they handle it? Analyze the consistency of their returns and how they've performed in different market conditions. Ask them about their transparency and reporting. Ask them for a sample of their fund report. What does that look like? How often are you going to get those reports? You know, I've had people say, well, they don't do any report. I haven't received any reports. And it's like, well, did you ask them how often they report? Well, they only report once a year. Well, if you're expecting to get monthly reports and they only report every year, you're going to be pretty disappointed. So ask for a sample of their fund report. Ask the question, how frequently do I get reports? What do they look like? Understand the operator's investment strategies. That's a big one. Determine if their strategies align with your risk tolerance and your investment goals. You know, if your investment goals are very short-term in nature and you're investing in a commercial project through a syndication and it's a 5-year investment, that's probably not going to align with your short-term investment goals. That's something that's longer term. So, you know, this is another thing that I tell people is, decide what your goals are up front. You know, decide, am I investing short-term or long-term? What kind of dollars am I investing? What kind of rates of return am I expecting? And then you can start to ask these questions and see if those things align with what you're looking for. Market knowledge. I would ask to evaluate the operator's understanding of the real estate market and their different trends. Consider what their ability is to identify and capitalize on investments. You know, one of the things I talk about a lot, especially with the market in the condition that it's in now, is that operator so siloed that the only way that they think that they can make money is through one strategy? I would want to align myself with an operator that can pivot and has multiple strategies. Ask what the team composition is. Ask who their experts are. How do they, you know, what does their infrastructure look like? You know, there's one thing that people talk about is that person a single point of failure? What does their team look like in the event that they get hit by a bus? You know, so understand who that team is and what that team's skills are. And I'm going to tell you guys a little bit about our fund management team, and you're going to see what I'm talking about. Risk management. And this is a big one, especially lately, is understanding how that operator identifies, assesses, and mitigates their risk. Inquire about their processes and procedures. Risk management can be everything from property management to servicing management, you know, the servicing of the loans. What does their loss reserve look like? You know, this is money that they need to be setting aside from the capital that they're raising to also be able to mitigate risks. And we're going to talk a little bit about that. Ask what their alignment of interests is. Determine if the operator has their own money invested in the fund. I can tell you here at SIC, we all invest in our funds. We are encouraged from the executive level down to be active investors and to start to create passive investments for our family. Look for evidence of this that show you that the operator's interests are aligned with those of you as an investor. Understand what the fees and costs are. There are costs to running and managing a fund. Nobody does this for free. We're not a nonprofit company. We're all in this to make money for each other. But you need to understand what those fees look like. What is the management fee? What is their performance fee? Compare how these fees match the industry, you know, and fund management fees are very common in this type of an investment, but ask them what that fee is, you know, and then you're going to do your due diligence and you're going to confirm or get information that maybe their fees are too high. You know, you want to understand what that is. Confirm that the operator is registered with the relevant regulatory bodies if it's required. Inquire about their compliance procedures. All of these funds are regulated to some extent by the Securities and Exchange and also typically at the state level. And then last but not least, evaluate communication and how accessible this operator is. I can't tell you how many times I talk to people and they say, yeah, I made this investment with this company 6 months ago and I keep calling and emailing and nobody's responding. What does that look like? How accessible are they? I can tell you this, I actually was just talking to my team today, and my husband and I were building a house, and I reached out to the county that we have the permit pulled in. I believe it was on August 6th. I just got a call back today. It is the 23rd. I told my team, if you guys ever did that to a client, you would not be working here anymore. I can't tell you how many times I try to reiterate with our team, even if you don't have an answer, if somebody is reaching out for a question or has a concern or just needs a response, even if you don't have the answer, at least just respond to them the day they reach to let them know that you're on the other end of this and you're working on it. Okay, it's important to understand that. Is that operator accessible and how quickly do they respond to investor inquiries? If they say, hey, we'll get to you by the end of the week, at least your expectations are set accordingly. So again, these are just, you know, a few of the things that I think are really important for you guys to ask, whether you invest with us or you're investing with another operator. Like I said, this is your hard-earned money, and it's important for you to do your own push-ups and ask these types of things, and it's okay to ask those. And I would be happy to give any of you guys on this webinar that checklist that we just went over. So if that's something you're interested in, you can actually let us know through the comment section on the webinar. All right, so a little bit about what we do here at Secured Investment Corp. We invest in and we also finance the rehabilitation of homes in the affordable housing market. And when I say affordable housing market, one of the things that we focus all of our investments on as an organization, whether we are buying real estate or we are lending on real estate, we want to be lending and buying properties that are in the affordable housing market. So single family up to 4 units and specifically under the FHA cap. And we specifically do that for a couple reasons. One is we want to promote home ownership. Two is when we're lending or if we're buying that type of an asset and the markets start to shift and we don't have the ability to sell something, or we have to take a property back from a borrower and markets start to shift, we can always typically rent those types of properties and keep them cash flowing. We, again, purchase affordable homes, mainly single family up to small commercial. We provide short-term funding for our top-tier real estate investors and operators that acquire housing in this affordable and working family market. So we provide that short-term lending for these types of investors. And then we provide opportunities to invest passively in the affordable housing market space through our funds. And we'll talk a little bit more in detail about our funds and what they offer. All right. Some of the things that we provide also directly here at Secured Investment Corp. A lot of you on here, and I recognize some of your guys' names, know that we offer real estate education. If you are an active real estate investor, you're out there deals, you want to rehab the properties to either sell or turn around and rent and cash flow, and you're new to this, we have a full education program that will teach an active real estate investor. We're a fund management team. We manage right now currently 3 funds, and we're going to talk about one of our newest funds here at the end of the presentation. We're a loan servicing company. Any of you folks that are on this webinar that are out there purchasing notes or have your own notes and you are trying to service them yourself, do yourself a favor. Let Lake City Servicing do that. we collect payments, we will do draw management if there's rehab involved, we will even help up through a foreclosure management and a real estate owned management situation if you do take a property back. So we're a loan servicing company. We are a property management company. So in the last 12 months, we have become a licensed property manager in the state of Washington and the state of Idaho. If any of you guys on here have turnkeys, or you're wanting to buy turnkeys and you want property management services, we can help provide that. We are a licensed contractor, and we're actually pretty proud of the fact that we're also a ministry. So we do a lot here. We have about over 100 employees right now located in Coeur d'Alene, Idaho at our corporate office. And then we have an extension of this corporate office not far from here, about 30 minutes away, where our contracting crew, our property management, and all of our crews that go out and rehab our properties are actually housed out of. So our mission statement, and we talk all the time about this, and I have to say this is probably one of the things that I'm most proud of among a lot of other things. There's a lot of private lenders out there that provide short-term loans that, quite honestly, don't really care about borrowers. All they're interested in is getting a big origination fee and getting you to sign on a loan so they can get paid, and then you're on your own. We don't do that. Our borrowers, our students, and our investors are all equally as important. Our motto here and our mission statement at the company is we get more of what we want by helping others get more of what they want. And we truly do believe that. Our clients are the most important to us. And when our clients are successful, we are successful. We also talk a lot about here within the organization. For those of you that don't know, some of you that have been here experiences, we used to actually invite some of our students to this. We do a staff huddle every Tuesday morning. We talk about our core values, and they are the 4 core values for the company are dependable, determined, diligent, and driven. I feel like you can count on us. We are determined to make sure that our clients win. We don't quit until the job is done. And we're all very driven here. So, I honestly can say that, our employees here embody these core values, and we talk about them often. They're on our walls, they're on the front door when you walk into our office. And it really is that important to us as a management team, as an executive team. Little bit about the circle of wealth. We talk about the circle of wealth all the time, and it's something that we introduce also to our new employees. So we only hire employees, and they're only available, or they're only allowed to start on the 1st of every month because they go through a 3-day training. But we talk about the circle of wealth, and really what the circle of wealth for us is we want all of our clients to get to a point in their financial journey where they have $250,000 in cash. They are what's called an accredited investor, which means they have $1 million in assets. Everybody comes into our company at a different place with the circle of wealth. We have up at the top our Lee Arnold system of real estate. This is our educational. A lot of times these are people that have no idea how to invest in real estate or even how to get started. And so a lot of our clients will flow into our system up at the top through our education. Some of our clients that come in, progress and they go to Kogo Capital, and they use Kogo Capital to fund their real estate projects. And some come in right at Kogo Capital. Maybe they're experienced and they're needing more funding so they can do more deals. Kogo Capital is our funding arm of our company. Secured Investment Corp is our parent company and also the entity that manages our funds. And this is where our clients come in that have a little bit of capital. Some have more than others. Some are just getting started investing. But this is where they start to create passive income and investments for themselves. We also have loan servicing. Again, that's our Lake City servicing arm of our company. And this is where our clients come if they are borrowers, if they are people that currently own notes looking for servicing services. They will come in typically through Lake servicing. A lot of, well, not a lot, all of our Kogo Capital clients that borrow money from us have some interaction with Lake City Servicing because they are the entity that collects their payments, helps them with their draws and all those types of things. And then last but not least, we've got He's the Solution Ministries, and this is our ministry that encourages being bold in the workplace. We actually have a big event coming up. So if you're interested in attending, if you're in the Spokane market, we have a big, I believe it is 2-day event coming up in October, but it is also available online. So if you want any information about that, you can also put some contact info through on the chat box. So, where we operate, currently we're lending in 45 states. I will tell you it is our goal to be lending in all states, but there are some states that require different types of licensing, so we're currently working on that. But right now we are active in 45 states. We are actively investing in our current market, which is Spokane, Washington, up through Coeur d'Alene, Idaho. And we are currently open to investments, and I'm pretty proud of this also, from not just accredited investors. We have investment opportunities for people that don't necessarily qualify as an accredited investor. So that's something super exciting. There are not a lot of real estate funds out there, and I know most of them that allow unaccredited investors to invest in their funds. A little bit about our fund management team. So there's 3 of us that technically manage the fund, but we have massive teams underneath us that keep everything moving and report to us. Lee Arnold, as most of you should know, is our CEO and is a wealth of knowledge. You know, I think what he brings to the management team is his real estate background. He has done everything under the sun if it involves investing in real estate, and we all look to him for a lot of information. I've learned a ton from him personally, and he is a big component of our fund management team. But again, just to reiterate, we have teams underneath us. It is not just us 3 managing this. Jacqueline Olson also is a wealth of knowledge. She is and she's our numbers person. That gal, I don't know a lot about spreadsheets. I can get through them, but she is the master at it. She runs a lot of analysis when we're looking at whether we should invest in something, and she's also a wealth of knowledge. She has quite a bit of experience also in the real estate investment world, and so she's a big component of our fund management team. And then there's myself. I have been in the private money space for 18 years. I have done everything from underwrite files to service files to collections to having my securities license and handling and quite honestly being blessed enough to work with our investors. And so we all bring a different component to it. I have a lot of real estate experience also, but I think we make a pretty awesome fund management team. For those of you that have already invested with us, these are some people that might have familiar names to you. I know we don't get to meet everybody in person, but I thought it was important to at least introduce you to my team. We've got Heather Meredith. She is the glue within the investor relations department. She's our office manager. Lisa McNeil is investor relations. She has been around for many years. She actually started as my assistant, and now she's raising capital and working with a lot of you guys on your investments. We've got Tim Loom, who's probably our newest investment development consultant, and he's great. He's eager to learn. He is great with our investors, so some of you might have already had an opportunity to talk with him. And then Tommy Larson, who is also an investment development consultant. She's coming up on her 1-year anniversary, so she works with a lot of our investors that are looking to passively invest in notes and also in our funds. So you guys are going to be encouraged to schedule appointments to get a consultation with my team, and so you might be able to get to talk to one of them or myself. So we talk about impact investing. It's something that whoops, sorry about that, guys, that we talk about a lot about around here, investing in housing that is affordable and that will remain affordable for families. You know, we want to make an impact. This is not just a tool that we want to use to make our investors a lot of money on their investments. We also want to have the benefit roll over to our borrowers. I believe that our borrowers are buying these great houses, they're regentrifying them, and they're creating home ownership opportunities for families. We invest in rental properties. You know, we're committed to keeping the cost of rent also affordable. As we've seen interest rates increase, properties have not been selling as quickly and as often as they were. There are a lot of people that quite honestly can't afford to buy a house right now because interest rates are so high. We believe there's a big opportunity in the rental property space, and we want to create rental properties that are affordable for people, and you know, people have pride of ownership when they're living in a home. We're underwriting deals with the FHA cap mandate. We are not going to buy properties, invest in properties, and lend on properties that are over that FHA cap. We believe that when you get over that FHA cap and you're in those high-end jumbo home loans, your database of clients that can actually afford to buy those types of properties is diminished, and that means that you don't have as much opportunity to sell those types of properties. So again, we're focusing on that affordable housing market space, whether we're buying it or lending on it. Some of the things that we're solving for, you know, and this is where I think, you know, this might touch home with some of you. You know, where can Secured Investment Corp help you in this journey? It might be in the affordable housing market space. You know, we are selling some properties on contracts and doing owner financing and those types of things. But where we really come into play is helping people create legacy wealth. You know, we talk a lot about this, and actually Lee got up and spoke at our most recent staff huddle about this. You know, the days of contributing to your 401k and counting on your Social Security to cover your expenses is long gone. It's important for people to think about that and start to create passive income for themselves, whether that's buying cash flowing properties, whether that's investing your dollars right now so you're not depleting your savings account when you retire. You can actually let your money work for you, but also to create legacy wealth for your families. You know, it is very difficult this time and day to get ahead of the game, and we believe that real estate solves for that, and there's different avenues to do that, and there's different ways that you can accomplish all of these things, and so we are big proponents of investing in real estate. We do all of this by delivering targeted, consistent returns. We have the ability for you to have quick liquidity to your capital, but to keep your capital working. We believe that we also offer diversification through our investments. These investments are investor-friendly funding. So if you are an active real estate investor and you are needing quick funding and you don't want to be tied into prepayment penalties, we have funding opportunities that are investor friendly. We have targeted returns. We have zero principal losses. And we also have historical double-digit returns. So we've got a track record. So currently, and this was really interesting, I ran these numbers this week with my team, you know, and it was pretty mind-blowing to actually see it. We currently have helped out 1,979 investors in the 11 years that I have been here start to create passive income. This is not even including the borrowers that we've assisted with their funding. These are just investors that have invested dollars with us, whether that was through notes or investing in our funds. We have investors in every state. I thought that was a really cool fact. I was kind of curious what that would look like. And Heather Meredith in my office ran an analysis of that. We actually have an investor in every state here. We've raised, like I said, $99,441,000 and some change. We currently have 41 million and some change under management. So those are our assets under management. In the lifetime that we've had the funds, we have originated over $54 million in loans. So these are loans to our borrowers. These are loans that our brokers have sent to us. That has totaled over $54 million. We have bought properties in our local market exceeding $25 million. Our Fund 2, which has actually been around for almost 10 years, maybe even a little over 10 years, Has a lifetime annualized yield of 9.71%. Which is pretty amazing. It has had very consistent returns. And our Circle of Wealth Fund 3 has an annual lifetime yield of 7.08%. So our Circle of Wealth fund is actually the fund that's open to our unaccredited investors. So all of you folks that thought you had to just be happy with putting your money in your sad little savings account, there's actually other options out there for you, and you could earn over 7%. So we're going to talk more about that. So what are the benefits of investing in a private fund? Those of you that are on here that are familiar with what a REIT is. A REIT is a real estate investment trust, but it is something that is publicly traded through the stock market. This is similar, other than the fact that it is a privately managed real estate fund. So with our fund, our investors are paid first. Another big benefit is you have low minimum investments of $1,000. We actually have a 90-day divestment option for those of you that have ever invested in like a syndication. Those are typically a 3 to 5 year tie-up, and you're not getting out till they sell the property. We actually have a fund, we're going to talk more about it, that has a quicker divestment option. You're not paying a financial advisor or a money manager any commissions. Another big benefit with the funds, and this is something that I talk to a lot of clients about often, because they'll have other investments, and I think it's very important to be diversified. I would never encourage any of you to put all your eggs in anybody's basket. But what tends to happen is people will start to invest their dollars, sometimes through what we call self-directed IRA accounts, self-directed 401ks. But the challenge with those types of accounts and investments is a lot of times they start to pay you, which you're probably saying to yourself, well, why is that a problem? It's not a problem. The challenge is then that capital sits there undeployed. Most investments have a minimum investment. So until you have a minimum to put back into something else, which most investments are more than $1,000, that money sits there undeployed. With a real estate fund like ours, you can actually stay fully deployed. You can say, hey, Heather, I'm in growth mode. I have a day job. I don't need the cash flow yet. I would like to just keep my money always working. You can actually set them up to do what we call reinvest. So every month or every quarter, you're going to reinvest your earnings. We're going to let you know, hey, Charlie, this is how much you made on your investment, but we're going to reinvest it here, and now you're compounding your earnings, which just juices your yields even more. Another big benefit is there is lower regulatory and compliance cost. There's more flexibility as a fund manager. Remember, I talked about market shifting. As a fund manager, you got to be able to shift quick. You know, our goal is to make money for you guys and have our funds profitable. And if your hands are tied and you only have the ability to invest one way, that is going to cause you to not have as much flexibility and be able to pivot with the market. I believe that private real estate funds have more diversification, especially ours, and we'll talk a little bit about that. And, you know, investing in a private real estate fund, you can get alignment with the interest of your investments. All right, so private real estate funds with institutional quality. Our types of funds have transparency. You have very clearly defined reporting that you get. Another big one to ask, outside audits. Do not be putting your dollars with any operator that does not do an outside audit on their funds. If they are internally auditing it, there is still room for error and commingling of funds. Our funds are audited by an outside auditing firm. We actually use a very big auditing firm called Armanino. It's important to ask that question. Another big benefit is third-party verification, compliance, and the team. You know, what does the team look like that's managing this fund? What kind of processes and procedures do they have in place? So, Secured Investment Corp, we continue to deliver consistent returns and results even through volatile times. We've never failed to pay out earnings. We did very well through COVID. I think that's an attestament to our company and our team. But we're pretty proud of the fact that we've been through some of these market shifts, and we have still continued to be able to pay out earnings to our investors. So let's talk specifically about the types of funds that are available to invest in here. And we've got a few of them. Some of them have different requirements than others. Some of them have different returns. Minimum investments can be different. I've got a lot of information on all of these funds, and so don't feel like you guys have to write this down quickly. I'm going to really encourage you, all of you guys, to schedule an appointment with me and the team, and we can get you some more literature on this. So secured investment high yield fund 2. This fund has been around, like I said, for about 10 years now. It is a very well-oiled machine. And when we opened this fund back in the day, this type of a fund has to be registered with the Securities and Exchange. And at the time, you only could let accredited investors go into an investment like this. So let's talk a little bit about what that means. An accredited investor is defined one of two ways. You do not have to qualify by both definitions. So you can either qualify through your income. So if you've made $250,000 a year as an individual or $300,000 a year as a married couple for the past 2 consecutive years, you are considered an accredited investor. Or if you believe that you have in excess of $1 million in assets, you would be considered accredited. Now, if you're going to qualify as an accredited investor with your assets, you can't include your primary residence. So if you have a bunch of equity in the home that you live in full time, you cannot include that. You can include rentals, second homes, things of that nature, but your primary residence cannot be included. They're also going to take into consideration your liabilities. So for example, if you come to me and say, hey, Heather, I believe I've got about $1.5 million in assets, but I also owe $1 million on my primary residence, that are not your primary, but you have $1 million in debt, you're not going to be considered an accredited investor because really your assets are only $500,000. So one of two ways, either your income or your assets. So high yield fund 2, this fund invests in, again, in residential real estate. So we are taking a portion of the fund and we are buying real estate in the Spokane and Coeur d'Alene market. Those types of properties are bought sometimes to rent, bought sometimes to sell. Regardless of what type of profit that they create, that profit goes back into the fund and is paid out to you guys as a fund investor. And then we also take a bulk of the capital in the fund and we lend that money out. So that's what they would call a debt fund. We lend money to other real estate investors on a short-term basis. So 12 months on average is our loan term. The fund makes money off of origination points. It's going to make money every month when that borrower makes their payment. And the fund's asset, which is the money, is secured by a lien against a property. So we lend only in a first lien position. So that's how our funds make money. Minimum contribution into high yield fund 2 is $50,000. So you do have to invest your first $50,000. Now, keep in mind, it doesn't have to come all from one account. So let's say, for example, you call me up, you decide this is a good fit for you, but you've got $25,000 in your self-directed IRA and you've got $25,000 in cash. That would be your minimum contribution of $50,000. So keep that in mind. Or husbands and wives. You know, your husband has $30,000 in his IRA and you've got $20,000 in your IRA. Again, we look at you guys as a unit. That would be your minimum contribution of $50,000. But once you put that $50,000 in, you can invest any dollars there on after. So for those of you that have other investments that you're getting monthly earnings on, or even quarterly for that matter, if you're thinking, well, this is great, I'm making this money, but now it's sitting in my IRA or in my savings account, and now I got to find a new home for it, and I don't have $50,000 yet, you could roll those types of earnings into this fund once you make your $50,000 investment. And we have a lot of people that do that. This fund pays out earnings on a quarterly basis. There is a 12-month tie-up period, so it's really important for you guys to always ask an operator, how do I get my money out and when can I get my money out? Most people invest in these types of investments, these types of funds, you know, when they're looking for something long-term, but life happens and maybe a new opportunity comes up. You need to understand how you get your capital back. So the way that our funds work is you have to invest your dollars for at least 12 months. So once you make your first $50,000, that 12-month tie-up period starts. And once you hit that 12 months, you have the ability to what we call divest your money. In our staff huddle the other day, Lee asked, does anybody know what the opposite of, or does anybody know what divestment means? And someone said, it's the opposite of invest. Divestment just means that's how you get your capital back. You're exiting the fund, you're divesting your dollars. So once your 12 months is up, your divestment process will start. The divestment process is done over 4 quarters. So let's say hypothetically you put $100,000 in this fund, and after 1 year you called me up and say, hey Heather, I need access to my capital. We're going to start to divest you, and every month, every quarter, you're going to get 25% of your investment, so hypothetically $25,000 once a quarter over 4 quarters. So it's really a 2-year investment, which honestly in the real estate fund world is a very short period of time. Again, most funds are like 3 to 5 years, but it's still important to know that you're not going to just call up at 12 months and I'm going to say, yeah, great, we're going to wire you that money back. It's over 4 quarters. We do that so that we don't have to ever have the concern with, oh gosh, all these people ask for their capital back, we can't exit them tomorrow. We're going to have to tell everybody they can't have their money for a minute. So 12 months in, 12 months to get your capital back. The funds have the ability to reinvest your earnings. So remember, I talked about this. Every quarter you would know, hey, this is how much my investment made. If you want to just put it in growth mode, we would just reinvest your earnings. You're going to get a nice statement that says, here's what your capital balance is now. And now for the next quarter, you're going to earn earnings on that increased capital balance. This is a fully audited fund. Again, we audit our funds by an outside auditing firm. That's a really important question for you guys to ask. I have heard horror stories lately of people that invested money into an operator that didn't audit their funds by an outside auditing firm that are in big trouble now because they were commingling funds. Always ask that. This fund is friendly to taxable and non-taxable accounts. Any of you guys, by giving me just a raise of hand if you guys have any self-directed IRA accounts that are on the webinar. I'm always curious to know who has those. If you have them, just put in yes in the chat section. I'm curious about that. For those of you that don't know, good job, Jonathan. For those of you that don't know, a self-directed IRA is a way that you guys can set up IRA accounts, or you could even roll over existing IRA accounts or 401k accounts, and now you can start to decide how you're going to invest it instead of relying on your plan administrator or your money manager that's charging you a big fat commission. You can actually decide how you want to invest your dollars. The only caveat is to this: if you have a current 401k and you're still working for that employer, you're not going to be able to roll that account. For any of you guys on here that have recently left jobs and have a 401k sitting with your previous employer, you need to look into this. I'll tell you a quick story. My husband switched jobs about 12 months ago. He had a small 401k and we were watching it, and we all know where 401ks were 12 months ago. They are doing a little bit better now, but it was negative 2%. So we waited and waited, and finally when it hit 3%, it was earning a big whopping 3%. We decided we were going to roll that account over to Quest Trust out of Texas, who is a self-directed custodian. He had about $50,000 in this account. We rolled it over to Quest, and currently right now we are invested. We bought a note with it, and he's earning 11% on his money. He didn't take a distribution, so he didn't get taxed on it, but now he is picking and choosing how he wants to invest it, and his target, you know, for that money is 10%. So he finds notes and investments where he can earn 10 or 11%. So again, this is just a way for you guys to set up some tax deferred accounts. You can set up traditional IRAs. You can set up Roth IRAs. That's probably a whole nother webinar. But these types of real estate funds are friendly to those types of accounts. So preferred rate, 9%. This means that the first 9% has to go to you guys. We do charge a management fee. All funds charge a management fee. And if somebody tells you they don't charge a management fee, I would look at the fine print, because there are costs to running a fund. You want to make sure that the staff and the overhead is being paid to manage your fund properly. So if somebody says they don't charge a management fee, I don't know that I would necessarily believe that. It's probably hidden somewhere. We charge a 1.75% management fee. This is an annualized fee. It's not every month, it's not every quarter, it's spread out over 12 months. And your guys' preferred rate of 9% has to be hit first. So that's what we talk about. How do you get paid? You should be getting paid first. That motivates a fund operator to make sure that that fund is profitable, because that's how we make money after that. So 1.75% management fee has to be paid first. Your guys' 9% has to be paid, and then anything above and beyond that, so essentially above and beyond 10.75 would be split 50-50. So that's what keeps fund operators motivated to get those yields up on these funds. We're a for-profit company. This fund has an annualized lifetime rate of return of 9.71%. I will tell you, historically, it's been targeting 10%, but what you have to keep in mind with an annualized lifetime rate of return is all those first years when it was just growing and getting started, you know, is what creates your, you know, that's also part of the equation for an annualized rate of return. But 9.71 is still a really great rate of return for a lifetime yield on this fund. So again, High Yield Fund 2, $50,000 minimum, accredited investors only, quarterly payouts, and you have the ability to reinvest your earnings. So for those of you that are saying, well, that sounds great, but I'm not accredited, the great news is we have the Circle of Wealth Fund 3. So we opened this fund up about 4 years ago. There were a lot of laws that changed through what they call the Jobs Act. And the SEC and everyone said, okay, great, we're gonna let you guys raise capital from people that aren't necessarily accredited, but we're going to regulate this much more closely than the other fund. We're also gonna only let them put in up to 10% of their assets or 10% of their estimated income. And that's how we're gonna protect the consumer. So we have the Circle of Wealth Fund 3. We were pretty excited about this. This was not an easy task to get through and approved through the SEC. I think it took us about 12 months to go through all the due diligence and get approved, and it was quite expensive to open. But we felt like we were doing our clients a disservice saying, hey, well, sorry, we'd like you to invest, and we encourage everybody to invest in real estate, but we can't let you invest unless you're an accredited investor. So Circle of Wealth Fund 3 is around just like Fund 2. It buys real estate, like I said, in our local market, and it lends money out. Minimum contribution into this fund is $1,000. It's open to everyone. They do limit how much you can invest. So again, the limit is going to be determined by either your assets or your income. So it says that you can invest only up to 10% of your stated income or 10% of your assets. But your assets you can get pretty creative with. So we can talk offline about that. It does need to be in $1,000 increments though. That is the other caveat to this. This fund also has a 12-month tie-up period with a 4-quarter divesting process. This one's interesting because we actually pay out monthly earnings. So I actually have accredited investors invested in this fund because they like the monthly payouts better than the quarterly. So for those of you folks that are on the webinar that are maybe retired, that have sold a business, you know, that really essentially are looking to replace your income and you like that consistency of monthly earnings, this fund would accomplish that. If you aren't necessarily looking for the cash flow, this fund also offers the ability to reinvest your earnings. It is a fully audited fund. Again, this is a fund that is open to taxable and non-taxable accounts, so your self-directed IRAs. We have people invested in this that have set up a family trust. We have people that have an LLC. So you can really invest just about any way, and we can help you get your account all set up. But just know, if you guys are using those self-directed accounts, Heather Meredith on my team is the wizard at filling out all those forms. She will handle all of that for you. This fund has a preferred rate of return of 6%. It also has a management fee of 1.75%, and our annualized lifetime rate of return is 7.08%. Actually, last month we just paid out 7.9%, so it is doing really well. Any of you folks that are invested in the fund that are on the webinar can probably attest to that. Again, both of these funds are ways that you guys can invest in real estate without some of the headaches that come along with it. You're not going to deal with tenants and toilets. Nobody's going to call you in the middle of the night and say their toilet's backed up. You need to come over and send a plumber out. You're not going to have to deal with contractors trying to fix and flip. You get all the benefits of those types of real estate investments, but our team and our staff handles it for you. So even if you are an active real estate investor, that doesn't mean that you shouldn't be doing this. This is your passive investment buckets. And we talk about this all the time at the company. Have multiple streams of income. You have your day job. You have your passive investments. Be an active real estate investor. This is just another tool in your guys' toolbox to start to create wealth for yourself and your families. It's just that simple. All right, this is what I'm most excited about. So one of the things that we got a lot of feedback from was, I like your funds. I don't know that I want to tie up my capital for 2 years. Someone on my staff, actually, Tim, is trying to buy a house, and he has been saving. The kid is like amazing. He probably has more money saved than most people do. But one of the things that he said is, I don't like my money sitting in my savings account because I'm not earning very much on it. And I like the Circle of Wealth Fund 3, but I don't want to tie my capital up that long because we want to buy a house. We heard you guys. We heard this from other investors, and sometimes it's not that they don't want to invest some dollars in those types of investments, but as you all probably do also, is you have different buckets, right? You have some of your money is more long-term investment strategies, some is short-term. So we are excited to announce that we have a new fund. It's called the Fixed Income Fund 5. Minimum contribution into this fund is $5,000. Now this at this time is only open to accredited investors, but it has a 90-day tie-up, which means if you invested today and you called me up next week and said, oh my gosh, Heather, we've had a medical emergency, we need our capital back, or you come to me and say, hey, I sold my practice, I know that I'm going to have to pay taxes next year in April, but I don't want my money just sitting in a non-bearing interest account. I need access to it eventually. This is the fund for you. So you can access your capital and be divested out within 90 days. So if you called me and said, hey, Heather, I'm going to invest, and in 1 week you said, hey, I need my money out, and we are going to divest you out in 90 days. Keep in mind, the 90 days could be a little bit longer because we only are going to do divestments on the last day of the month. So just be mindful of that. But you do not have to stay in for 90 days. It just can take you up to 90 days to get your capital out. We're going to do monthly earnings. We're going to pay out monthly earnings. So those of you that also like to see the cash flow monthly, this fund will be able to achieve that. You also have the ability to reinvest, which is what we got a lot of feedback from, was like, hey, I don't necessarily need the cash flow. I want to reinvest my earnings, but I also want to know that I can access my cash. This fund will also be fully audited. It's going to be open to your guys' IRA accounts. And this is another thing that I hear a lot of people say, well, I don't know if I want to tie it up for 2 years because what if a better opportunity comes along and I can make a little bit more money on you? We didn't want to tie your guys' hands. So even if you are investing with a self-directed IRA and you're kind of still out there looking for that 10% yield, you could still park it here. We would return your money to your IRA custodian, and then you can go on to your next venture. Fixed rate of return, 5%. So you guys are going to get paid 5% regardless of how the fund performs. That's a pretty great rate of return. And we actually lowered the management fee on this to 0.75%. We want the fund to be profitable. We want to be able to return you guys 5% on your capital. But we also want you guys to have access to your capital as quickly as 90 days, and it may be sooner. It's really going to just depend on what we have deployed and available. So we're excited about this. You guys should be excited about this. Most real estate funds have a much longer tie-up period. And this is some feedback that I have been listening to for at least the last 6 months. And I think it kind of started in January when people were nervous about the market, even if it's not that you need to go pay taxes or you have another investment, but you just want the opportunity to pull your capital out if you get nervous. This is the fund for you. Yes, it's not going to pay out the 10, it is not going to pay out 10%, but you also know what your fixed rate is. And that's something else I heard from people is, well, I like the idea that I could potentially earn 10%, but I'm on a limited budget and I like to know exactly every month what I'm going to get. Would also be a really good option for you guys because you will know you're going to get 5% on your money. The end. You can access your capital in as short as 90 days. So we're excited about this. You guys should be excited about this. I'd love to talk with you guys more about this. The team has been educated on this and is fully prepared to talk with you guys. So we have a lot of options. You know, we have high yield fund 2. $50,000 minimum. You're going to probably see closer to 10% yields on that. We've got the Circle of Wealth Fund 3. For those of you folks that are unaccredited, you're going to see closer to 7 to 8%. And if you're somebody that's like, hey, I love 5% and I love the fact that I can get my capital back in up to 90 days, then the Fixed Income Fund 5 would probably be a better option for you. And some people do all of them. You know, there's nothing that says you can only do one. I think the question you need to have and the conversation you need to have with me and my team is what kind of dollars are you trying to deploy? And we can kind of help walk you through that thought process. But again, this is super exciting. We think it's going to be really popular. And I will tell you, it is what we call an evergreen fund, where it basically means it's open-ended. There's no close date to it until we decide to wind it down. But we are not always going to take contributions into this. We're not going to raise more capital than we can deploy. And this is something that I talk with other operators about. You know, a lot of people think that raising capital is the hard part of it. It's only half of it. If you raise capital, you better be prepared to be able to deploy that capital to make the 5% return on the capital that these people are expecting. So I don't say that to scare people, but just know that there may be times that we might say, sorry, we're not taking any new contributions because we want to be mindful of the ability to deploy this capital. So if you're interested, I highly encourage you that you reach out to the team. So I think the question is, you know, where do you kind of fit in this? Are you a one-off investor? Are you buying real estate, you know, or are you someone that wants to look at notes? That's something we didn't even talk about. We're going to do these webinars once a month. And so I'm not sure what the topic's going to be for the next one, but a couple of the things that we've talked a little bit about with the marketing team is one-off notes, how to do due diligence. We also talked about self-directed IRAs. And then due diligence on an operator. So I also encourage you guys, if you guys have topics you want us to cover for the next webinar, let us know and we will take that into consideration. So you might be a one-off investor. You might be an accredited investor. You know, the options there also, in addition to the notes, is going to be Fund 2, Fund 5. And then obviously, if you're a beginning investor or don't have a large amount of capital yet or are not necessarily accredited, the Circle of Wealth Fund 3 would be a really great option for you. Or if you guys have friends and family. I deal with so many accredited investors that come to me and say, we love this model. We wish our young adult children could get started. We wish my senior parents that are now living in an assisted living facility could start to create some passive income for themselves rather than depleting their entire nest egg to support themselves in a nursing home. We have a lot of clients that do that. So Circle of Wealth Fund 3 would be perfect for that. I have a lot of clients that have taken advantage of that. So I'm going to put a couple things up here. We've got a link to the webinar and the calendar scheduler that will schedule appointments with myself and my team. I also had them create a nice QR code that makes it really easy for you guys. So I really encourage you guys. I think the call to action for all of you, even if you're not ready to get started, schedule a call with us so we can talk more about what your goals are and where we might fit in that. And if you're not at a place where you're ready to start to invest your dollars, at least you can get enough information so that when you are ready, you can make quicker decisions. We're here to help you guys. Again, we don't give financial advice. I'm not going to sit down and look at your whole investment portfolio, but I can tell you my personal experience and what my husband and I and my family has started to do to create legacy wealth and passive income for us somewhere down the road. So I don't want to forget about the questions. Let's see here if I can see what we've got for questions. Hold on here. And also, if you guys are wanting to get on, you should be registered to get the invite to the next webinar. We're going to do this again on a monthly basis. We'd love to have you guys all come back. So I'm going to go to the top and I am going to address, I know that Charlie's been putting some information in the chat box too for you. So let's see. Wally asked if we'll be getting a recording of this webinar. I believe, yes, that is the answer to that question. We will send a replay link out. Share this. Share this with your family and friends. That's how we grow these funds. That's how, you know, we become more responsible investors, is educating people. Paul said, what fee should I expect when investing in Cal Fund 3 account? So fees are just the management fee, and that is not an, I think one of the things I want to clarify with the management fee, I had someone ask me this yesterday, and I think we're all so accustomed to financial advisors and having to pay these absorbent fees. That is not an upfront fee. We don't charge you 1.75 of your investment dollars and we take that out. It's paid out every month or every quarter when they pay earnings. It comes out of that. So you're not paying it up front, Paul. It's actually coming out of the earnings when we actually go and pay that all out. Holly would like the checklist. We will get that checklist out. So make sure, Charlie, that I get the contact info for all those people that asked for that, because I saw that on a couple of these. Let's see. Somebody said, I have a home to rehab and need some help. Get a hold of Kogo Capital. Go to www.kogocapital.com and you can get the information you need and you can contact Kogo. They can help you with your funding needs and they will get you all squared away. As long as it's in one of the states we're lending in. Do you have an affiliate marketing where I can add you to my money funnel to potential partners for my real estate investment business? We do wholesaling and rehabbing. Jonathan, that's going to be Kogo Capital also, but may also, and I think Charlie answered you, but it also might be something that we can offer through our education through the Lee Arnold system of real estate. Laura had a really good question. She said, what's the FHA cap now? Does it differ from state to state? Laura, that is a great question. FHA caps do differ from state to state and actually counties. So go to the Kogo website, kogocapital.com, and I believe there is a link on there for the FHA cap website, and you can put the location in and it will actually tell you, and it changes all the time too. So go to Kogo Capital and you will get linked to the FHA, the website for the FHA caps. This question says, can I invest with my self-directed IRA and my personal account? So yes, you can. Like I said, our systems and softwares are sophisticated enough to say, okay, Charlie invested with his IRA. He also put money in with his liquid funds, but now he's got one login and he can look at all of his investment accounts in there. You absolutely can do that. The other thing I just want to reiterate, I know I already mentioned it, but I am a big proponent of self-directed accounts. I get up on a soapbox often. People tell me to stop talking about it, but we all want to pay less taxes, but we want to create wealth in an environment that we're not going to pay a bunch of taxes on it. Self-directed IRAs are so powerful, especially Roth IRAs. For those of you that don't know the difference between a traditional IRA and a Roth, a traditional IRA, you're going to get a tax deduction now by making investments into your traditional IRA, but you're going to pay taxes on that when you take that money out down the road. And you are going to be required at some point to take distributions on it. The Roth IRA is powerful. You don't get a tax deduction now. However, as you grow that account, let's say you put $50,000 in that now, and when you get ready to retire, you've increased the value to $500,000, you're not going to pay taxes on that. If it was a traditional IRA, you're going to pay taxes on the $500,000. So would you rather pay taxes now on dollars going in and not when you take them out, or vice versa? The other thing with a Roth is if they are inherited by your kids, they don't pay taxes on them either. So self-directed IRAs, if you are using any of those accounts, you please get a hold of our company. We will help you with all of that. All of these self-directed custodians have forms that they require you to fill out, and we do that all for you. We give them your report of your fair market valuation form at the end of the year. You don't have to do any of that. Let us help you with that. Charles said, I would like to be able to show this presentation. Is there any way for me? And I don't think I could read the rest of that, Charles. Yeah, Charles, there's going to be a replay and you are more than welcome to share that. And it's great to see you on here, Charles. Charles is a longtime client of ours. Thank you for coming. Ronald said, are the rules for who is an accredited investor changing? I heard that they were. There are some exceptions to the accredited investor rule right now. If you are someone in the industry, you are a financial advisor, you are a fund manager, there is a carve out for people in different professions that they wouldn't have to qualify through their assets or their income, but it's based off the fact that they have experience in this industry. So Ronald, you are correct. There are some changes. I'd be happy to talk with you about that offline. But for the most part, you have to qualify through your income or your assets. Holly, we would love to talk to you also about your 401k. We will reach out to you. It's pretty powerful being able to move that, not take a tax penalty and a deduction, or not a deduction, pay taxes on it and a penalty. So there are ways that you can do that. And what we'll do, just for clarification, we're not a self-directed custodian, but what we can do is give you the names of several that we have really good experiences with, and they will do it all for you. I have to tell you, when my husband moved his account over, it took a week. We let them know, or my husband let them know who's his current person was that was managing it. They reached out to him and they rolled that money right over to Quest Trust, and within a week we were able to redeploy that capital. Jonathan says, we have a way to find notes. If you want them, let me know. Jonathan, we actually do have a division that purchases notes. So I would reach out to, not to Kogo, reach out to me and I'll put you in contact with the right person. Ivor had a really good question too. You guys had good questions tonight. I have an LLC designated for loan lending. Can this entity invest in the Circle of Wealth Fund 3, even though I personally meet the requirements as an accredited investor? Absolutely. I have accredited investors in Fund 3. So there's nothing that says that you cannot go into that. Also, Ivor, on a side note too, we sell notes. So get in touch with me. Let's schedule an appointment and we can talk more about that. Laura says, will the fixed income 5 ever be available to non-accredited? This fund will not, Laura, because of the filing we did with the SEC. It may be something, if we find that this is really popular, we may look at creating another one for unaccredited investors. So great suggestion there. Antonio says, how do we get more information about your company? What is discussed today? I would love to schedule an appointment. I think Charlie put the link in there, Antonio, to schedule an appointment with me and my team, and you may have already done that. So Abdul says, you just answered my question, which is, can I share this webinar? Absolutely. I wish that all of you would share it with one person. The more that we spread the word and educate people on this, the more opportunity I think is out there for people outside of their financial advisors to start to create wealth for themselves. Joseph said, what's the maximum allowable for Fund 3? So Fund 3 is either going to be determined by your stated income or your stated assets, and it's going to be 10% of one or the other, whichever is the greater. What I have found is a lot of times people can invest higher dollars based off of their assets. Joseph, we can talk about that offline, but it's either 10% of your stated income or 10% of your stated assets. Richard also wants a copy of the checklist. We will get that out to everybody. Adrian had a suggestion for the next webinar on credit and budgeting, a road to home buying. That's actually a really good suggestion. We will take that into consideration. Couple other people want checklists. We will definitely get that out to you. Dawn would like info on my book. So Dawn, we will get that out to you also. Byron also mentioned that there's discussion of relaxing the definition of an accredited investor. I wish they would, but again, we always are compliant with our regulators. Couple more people want a copy of the webinar. Here's one about a note. I bought a note in Texas and the note seller has not recorded a transfer document. Can I record the note purchase myself? Aaron, get a hold of me. Let's talk about this. Yes, that is. So what Aaron's talking about is he bought a note. So essentially a note is a lien that you're buying against the property. The goal of buying a note is that the borrower makes payments to you and then they pay you off when the loan matures or when they exit the loan. The most important thing when buying a note is to make sure that the person you either bought the note from or the borrower has a recorded lien against the property. It sounds like he's not sure that that actually happened. And so, Aaron, I think that Lake City Servicing could give you some advice on that. If you get a hold of me or schedule an appointment with the team, we will get you in touch with Lake City Servicing and they could probably help you sort that out. John uses his 401k. Hi, John. John is a very good, long time. You've probably been around the longest, John. He's a very good investor of ours, and he is very educated on investing in notes and also the funds. Mike Foster had a question. I'm not going to get too far into the weeds, but I want to bring it up. Mike Foster said, of all of your funds that you talked about, are they able to avoid unrelated business income tax? There is something called UBIT, and UBIT is unrelated business income tax. And I think, Charlie, make a note of this. I think this is something we should do a webinar about. Unrelated business income tax is tax that is created when you are investing through your self-directed IRA. It typically occurs in funds like ours if they are leveraged, meaning they borrow money, which is a very common strategy with real estate funds. But keep in mind, UBIT is such a small percentage. If you're in a $30 million fund and you've got $50,000, your equity ownership in that fund is so small that the UBIT is typically so minor, it isn't a huge issue. But just know, if you're using self-directed IRA accounts, you should be asking operators, could UBIT occur? And it absolutely can with our funds. It's typically so small that it doesn't matter, but usually when you're experiencing UBIT, it's because the fund is making a lot of money. So Mike, the answer to your question is yes, it can, and we can talk more offline about that. But keep in mind, guys, I don't want to get too far in the weeds. I want to be mindful of your time. That is another topic that we could go into. I mean, we could probably talk for an hour on that. Let's see. Amy said, that's nice of you, Amy. She said, as a brand new investor, I'm so grateful to have found you. I was praying to find a group of investors interested in supporting the affordable home market. Thank you for answers to a prayer. Thank you, Amy. That means a lot. She said, I'm grateful because I turned down FHA and VA clients all day long because of low credit scores and a big lack of education. So hopefully we're providing value in that market for you, Amy. All right, let's see here. Can you put a link up to where to find the requirements? And I'm assuming this says for the different investment funds. You can also go to our website at securedinvestmentcorp.com. All of our funds are on there. But James, if you get a hold of me, we have one-page marketing pieces on each fund with all the information I just went over, and we can provide you with that. And for any of you that want that, get a hold of us, schedule an appointment, and you can also share that with anybody you want. I'm glad you guys like the checklist. I have had a lot of requests for that. We will definitely get that out to you. All right, I think that's it. So, wow, almost 6 o'clock our time. So I feel like we did pretty good, almost an hour and a half. I didn't want to keep you guys all here all night, but I wanted to make sure that your questions got answered. Again, I encourage you guys all, schedule an appointment, educate yourselves. If you're ready, we can talk about what the next steps are. If you're really just at the beginning of your investment journey and wanting to get more information, still schedule an appointment. There's no obligation. We want to share what we know. I appreciate your time. We will be sending out the information on the next webinar. I don't know that we've determined a date yet, but it will be next month. This is going to happen on a monthly basis. So we hope to grow this database. If you know anybody that wants to get invited to this, let us know and we'll get them on the email notifications so they can get signed up for it. But again, I appreciate your guys' times. I know you guys have busy lives, so it means a lot to me that you took time out of your evenings from your families to be with me. And I look forward to the opportunity to talk with you folks. Yeah.